Hello students, I welcome you all to class 11 accountancy online videos, online classes. First of all, I congratulate you people to opt such a nice subject of studies named as accountancy. This is a very new subject to you all. So far you have studied nothing related to this subject. So it's very good for you all that you have got an opportunity to learn a new subject. Whatever has been your past record or your past performance or your past knowledge, that is not going to affect you much here because this is a new subject and you will enjoy learning this new subject. In the very beginning, to introduce this subject, we will start with the first chapter of our class 11 accountancy, which is named as Introduction to Accounting. Accounting is new to you people as a subject of studies, but it's not new in this world of business, in this world of recording. Accounting is used by all those who are related with earning, who are related with business directly, and as well who are earning their money through either employment or professions. Accounting has not been developed overnight. It has its history and its gradual process of development. A bit of that I will be discussing with you people here before we introduce the meaning and definition of this beautiful subject, accounting. So let's start with its history and development. Some of the points I have noted down here for you people. We will be discussing keeping in mind all these points first. Around 4000 BC, before Christ, it has been found in the records that Egyptians used clay tablets to record payment of wages as well as collection of taxes from the public. Whatever were their revenues, they were keeping a record of that. They were noting down that on clay tablets. Then same thing was found in Greece also. The Greek people used accounting mainly to apportion the revenues received in their treasuries. So they had treasuries like gold treasury, jewels treasury. Likewise, they used to apportion the total revenues to their treasuries. So for that, they used some sort of accounting, some sort of records they were making. Likewise, from 700 BC to 400 AD, Romans also used day books. Nowadays, this day book we are calling as journal. We will be studying in our class 11 accountancy about this journal. So this day book was first used by these Romans in around 700 BC to 400 AD. As well as they used ledger also. That means books of accounts, we call that as. We will be studying later in this subject in one chapter along with journal about it. Then, if we talk about India, it is all around the world except India. If I talk about India, in India, first in Valmiki Ramayana, if you read about it, when Bharat, the brother of Lord Ram, visited him in the forest when he was sent on exile by his second mother, Mata Kekai, to forest for 14 years, and when Bharat came to know about it, he went to meet his brother after the death of their father, and he was knowing that his brother will be asking him about the position of the state after the death of the father. So he took with him all the records of revenues and expenses of his empire, and Lord Ram asked him, and then he presented before him all these things. This is something which we can take from Valmiki Ramayana. Likewise, In Mahabharata battle, King Yudhishthir told his brothers Nakul and Sahdev to maintain the proper records of expenses incurred during the battle. So it seems that accounting was in use in that time also. That means in Treta as well as Dwapar, in both the yugas, our ancestors used accounting records. In Chandragupta Maurya's time, his prime minister, Mr. Chanakya, who was named as Kautilya also, in around 23 centuries ago, he wrote his book Arthashastra, and in his book Arthashastra, he described how to maintain record of accounting. Proper methods he has given in that book. So it is here evident that accounting was used all over the world, including our own country. Later, after Chanakya's or this Kautilya's book in our country developed that Mahajani Bhai system, Mahajani Bhai Paddhati, which always states, Pehle likh, piche de, bhool pade kagaz se le. That means, before you give something to someone, first write, and then if you forget, take it from that piece of paper where you have written. That means record and then give or take something. This is the proverb of accountancy. It is being used even nowadays too. Then the modern accounting, if I talk about how it developed, what we are going to use or you are going to study about the accounting, how to maintain it. It was developed mainly by this famous personality, the Italian mathematician, Mr. Luca Pacioli. In 1494, in Venice, he was the citizen of Venice, a city in Italy. He, in his book, actually he was a mathematician and he wrote a book on mathematics. This is the name written here, Summa de Arithmetica Geometria Proportion et Proportionalita. In this book of his mathematics, 1/3 of this book, almost 1/3 portion of this book has covered up the double entry bookkeeping system. That means how to maintain accounting records. The modern accounting which we are using, it was developed by him. So he is said to be the father of accounting also, father of double entry bookkeeping also. We are using the rules and regulations of this book only, this system only. He in this book gave the concept of debit and credit, taking Italian and Latin words in use. And then from these words of Italian language and the Latin language, the words debit and credit, which are being used nowadays all over the world to maintain accounting records, were given by this man, Luca Pacioli. So he is nowadays, or he is considered to be the father of double entry bookkeeping or the modern accounting. So this is history of the accounting, how it developed, the one which we are studying here now, which we are going to study throughout this year and in your total life. After you have opted for commerce and this accountancy is one of your subjects of studies, you will be studying about accounting in every step, wherever you are going to study and you are using it in your life. This has been developed not overnight, it has taken a lot of time and it has been in use for a long time. Ancient times we are using. So the history of accounting had started with the development of civilization itself. On the basis of this history, if I ask you or I discuss with you, what is the need for accounting? Why accounting is required? Why it was done by all these people? The main purpose, if I talk in the present scenario also, is only to know about where we stand in terms of our monetary benefits or monetary position. If we talk about a businessman, mainly accounting records are maintained by business and the governments. If we talk about them, a businessman, he invests money from his pocket to his business and he wants to know whether this money he has invested in the business is fruitful for him or not. And for that, he would like to know about his profits, or if he has suffered with losses, then what is the extent of those losses. To know all this, he needs to maintain his accounting records properly. So accounting is required or needed to know about the progress of the business in terms of profit or loss, to know about the amount the businessman owes and the amount owed to the businessman. That means what are his responsibilities, how much he has to pay to someone, or how much he has to collect from someone because of the business transactions of purchasing or buying and selling of the material he is dealing in, and to know about his tax liabilities. Governments are run on the basis of the tax. So what are his tax liabilities? Nowadays in our country we have direct and indirect tax, and from indirect tax, if we take GST, has been one of the very important taxes. So what is the tax liability of GST for a businessman, that he can know through accounting records if he maintains them properly. So these are the needs, these are the reasons for which a businessman requires to maintain his accounting reports. On the basis of this history and development and the need for accounting, let's now describe the meaning and definition of it. So to understand its meaning, let's first discuss these two definitions given by these two eminent institutions. One is American Institute of Certified Public Accountants, and the other one American Accounting Association. So these two institutions, what they say about the meaning of accounting. American Institute of Certified Public Accountants, AICPA, what does it say? It says that accounting is the art of recording, classifying and summarizing transactions and events in terms of money and interpreting the results thereof. It means there will be some events. Those events are to be converted into money form. Then those money form converted transactions or events will be first recorded. Then their proper classification will be done, and on the basis of this classification, a summary will be prepared, and that summary has to be interpreted, including the results of that summary. This is what AICPA, that is American Institute of Certified Public Accountants, has said about meaning of accounting. Then American Accounting Association, AAA, it says accounting is the process. It has also stated accounting as a process. It has said here as an art, here it is telling as a process. That means it is a systematized body of knowledge. It has some steps in it. So accounting is the process of identifying, measuring and communicating economic information to permit informed judgments and decisions by users of the information. That means here this accounting has been taken as a process, as a systematized body of knowledge which has some steps of maintaining it, in which first identification is to be done, what has to be recorded, that has to be measured, in what terms it has to be measured, that AICPA has told us that it is to be measured in terms of money. Then after measuring and recording and classifying and summarizing, it is communicated to the users of this information. That means for whom we are maintaining it, to them it has to be communicated. So on the basis of these two definitions, one standard meaning we can establish. So what that standard meaning can be there, let's have a look on that. So, on the basis of those two definitions given by AICPA and AAA, that is American Institute of Certified Public Accountants and American Accounting Association, we can establish a particular meaning or one particular definition in our words, that is concluding definition of accounting. So, in that we can say that accounting is the process of identifying, measuring, recording, classifying, summarizing, analyzing, interpreting and communicating the required information relating to the economic events of an organization to the interested users of accounting service for making rational decisions about the entity. This is the standard meaning we can establish here on the basis of the previous description or discussion we made and the two definitions given by the two eminent institutions. This definition or meaning, if we see, it is a complete conclusion of what we have discussed. It includes, first thing, it is the process, that accounting is the process. When it is process, that means it includes some steps which are verified, which have been established through observations and experiments, that this process has been established. And this includes various steps like identifying, measuring, recording, classifying, summarizing, interpreting, etc. Then these are related to what? They are related to some transactions which we have called here as economic events. This is one of the very important content or attribute of the definition of accounting. Then an organization has to be there. They are recorded for the organizations, not for the individuals. And they are recorded so that we can report to the interested users of this organization who are interested in the result of this organization. So we have to make it for them. So on the basis of this meaning and the definitions we have seen so far, we can establish some characteristics of our accounting. To understand the nature or to understand the main characteristics of this accounting meaning completely, we need to understand minimum these four factors. Fifth one also I have written over there, that is the conclusion of all those four. So first we require to understand these four elements, these four activities or these four words or terms included in this meaning. The first of them is economic events. Accounting is a process of these economic events. Whatever is done in the process is done of these economic events, be it identifying, recording, classifying, whatever it is done, that is done for these economic events. So what are economic events? I am teaching you. This is an event. If it involves money, then it becomes economic event. So any event which involves money in it, but this money to earn something. When it includes the earning motive, then it is money. So when to generate money, to generate some money or funds, if we undertake any activity, any event, then that becomes our economic event. You have studied in your class 9 and 10 economics portion of social science about these economic events. When sectors of Indian economy were taught you in class 10 economics, you must have studied about these economic activities very well. From there only we are taking them. So economic event, if I talk about the business organizations, on the basis of these organizations or any activity we talk, they can be of two types, internal and external. These economic events can be internal as well as external. Internal means what is happening within the organization. This is a consequence of some happening which you can tell in financial character. If I give you the meaning of economic events, it is consequence of happening which can be measured in financial character, which can be written or recorded in financial character is an economic event. These economic events are of two types, internal and external. If we talk about a business organization, internal means when the parties involved, if it is an event, parties will be involved there. So if the parties involved are from within the organization itself, then that is internal economic event. For example, the businessman, he starts the business. To start the business, he requires money. So the money he brings from his pocket into the business is an internal event, an internal transaction. He has brought the money. Likewise, if he pays wages to his employees, he pays salaries to his employees, this is an economic event. Suppose it is a manufacturing industry or manufacturing concern, manufacturing business you are in. There are departments in that. From department X, that is stores department, If some raw material is transferred to the manufacturing department, then it is an internal event and it is economic. Why economic? Because it involves money. So these are internal transactions. Then external economic events, when two parties involved are not from within the organization only. One is the organization itself and the other party is an outsider who is not directly associated with our business, who is not working with us inside the business. He is helping us from outside, either in the form of a customer or as a supplier or as a money lender, in whatever form that person or that party can be. If we are making an event in economic form with them, then it is external economic event. For example, taking loan from the bank. Two parties, if it is my business, XYZ Limited, then XYZ Limited and the bank, these are the two parties involved in. Bank is giving loan or granting loan to XYZ Limited. So, bank is an outsider and XYZ Limited is the organization. Or for the bank, we can say bank is the party or the business organization and the XYZ Limited is an outsider. So it is an external economic event. Likewise, if we buy some raw material for conversion into finished product, then buying of that raw material, selling of that finished product, buying of a machine, these are all our external economic events. Why? Because people involved in it are from outside the business also. So to understand the meaning of this accounting, we require to understand this concept of economic events. After understanding it, you will come to know what is to be recorded, what is recordable. Okay, so this is economic events. Then second point on the basis of it, if we go, then it is accounting is the process. That means accounting as a process we have to study. So second attribute here as a characteristic is accounting is a process. Process of what? So it involves these 7 steps in it, and all these 7 names have been written in those both the definitions it was written. From there we have taken here in our standard meaning. So the first step of it is identification. Identification means we have to identify what to record. What is our event? We have to identify that. What is our economic event? We have to identify that. That means it should relate to the organization. If the businessman has got some personal transactions, personal events outside the business, they are not recordable. So this way we have to identify what is to be recorded in the books of accounts. And what can be recorded has to be an economic event. That means economic means that should be of financial character. Financial nature should be there of that event. And that must relate to the business organization. Then measurement. After you have identified what is to be recorded in the books of accounts, you have to measure that in terms of money. You might have identified that the business purchased 200 kilograms of raw material. Just simply this much is what you identified. Now here it comes that we have to measure it in financial character. Until you convert it into money, the standard form of money, currency of the country in which you are recording, you cannot record it into the books of accounts. So the second step comes to measure it into monetary terms. That is, convert into money. 200 kilograms of raw material is purchased or bought for processing or for manufacturing. So what you paid for that, that is your measurement. So suppose it is you purchase for 50 rupees per kilogram. So 200 into 50, you have to calculate 10,000 rupees. Now this 10,000 rupees is recordable. Right? So for second we have to measure what we have identified into monetary values. Then third comes recording. After you have identified and measured an economic event, you have to record that. Where to be recorded? We have seen in the history, Romans used a day book. So in that day book we will be recording here. That day book here for us is known as journal. Journal. Not general. Journal. Journal. So the transaction first of all is recorded into this day book, the journal. In this book the transactions are recorded date wise. that is in chronological order. So these transactions first will be recorded in the journal, and this journal has got some of its subsidiary books. Some helping books are there, either in journal or in those subsidiary books. Depending upon the situation, we will record them into those books. Then fourth comes classification. Classification of the recorded transactions, what we have recorded in the journal and its subsidiary books, that has to be classified on the basis of the nature. That means transactions relating to a similar group are to be recorded under one particular head. Now we will divide these date-wise transactions head-wise, and head-wise division is known as classification. That means we will maintain here a book which was used by Romans also, named as ledger. So ledger here now we will be using in classification. All the recorded transactions into the journal we will classify as various individual accounts. Then summarizing, after recording into the journal and from there to the ledger, recording in ledger is known as ledger posting. After making this ledger, you have to prepare a summary of all the ledger accounts. That summary first is known as trial balance. All these individual accounts are totaled, and then a balance is calculated. If any difference amount is there, then that difference is called as the balance, and of all these balances we prepare a summary named as trial balance, and with the help of this trial balance financial statements are prepared, which are known as income statement and balance sheet. We will be studying about them in the last chapter of this book of course of your class 11 accountancy. So summary is prepared. This summary what we prepare now then will be analyzed in step number 6. We will prepare an analysis. That means we will go deeply into these statements what we prepare. We will analyze them and we will make out some observations, and then those observations we will be recording. We will be interpreting. So analysis and interpretation comes as the next step. And last, after we have done all this, we will be communicating the results interpreted here to the interested users of this accounting information. What we are recording here is our accounting information. This accounting information is analyzed and interpreted. With this interpretation, an annual report is prepared. That annual report is communicated to the interested users of the accounting information. There are various ways for that. Most popular of them is the annual report, and nowadays these are available on the internet in the name of the organization. So these are the various steps to be followed in the process of accounting. So to understand the meaning, the first concept was economic events, second is accounting is a process, third comes there has to be an organization. Many times I have used this word organization, and here it is written twice. Organization and entity, both are same. Entity means any individual or any business organization, that is called as entity, which has a separate name, that has separate identity, is an entity. So an organization has to be there, for which we are identifying the economic events and recording and classifying and communicating the results thereof. So an organization has to be there. These organizations can be of two types. They may be with profit motive, they may be without a profit motive, but both are organizations. Profit motive organizations, you will be studying in detail about them in your business studies of class 11 itself. They may be started by a single person named as sole proprietorship. They may be started by two or more persons venturing together, then that is known as partnership. Then a joint Hindu family business can have their own ancestral business, that is also a form of business organization. Then we may have joint stock companies, then the cooperative societies. These are profit or non-profit making organizations. Likewise, local government, your municipal corporation, the state government, the central government, they have their various departments. All these are the organizations. So there has to be an organization. This is given in the meaning. Then interested users. Fourth term comes, fourth special word comes here is interested users, and I have also used at various points when I was describing this process mainly. Here I used it. communicating. Then here it is written in the meaning. So interested users. Who are the interested users? Interested users, we have seen here internal transactions, external transactions, parties are there involved. These parties are our users. So those who are keenly interested in knowing about our business are our interested users. They may be internal interested users, they may be external users. Internal users, like the owner, he has invested money from his pocket into the business. He wants to know what is happening with this money, what he has given to the business. Is business repaying that? The intention with which he gave this money to the business, is that intention of his being taken care of, properly or very well taken care of there or not? That means business is earning profit or not, the businessman wants to know. And to know that, we require accounting information. Likewise, the management, if it is separate from the owners, sole proprietor, owner himself is the manager. Management, partnership, the owner themselves, they are the management. But in joint stock companies, the management is different from the owners. So the management would also like to know, like owners only, whether the firm or the organization is earning profits. What are their various responsibilities, the amounts payable by them or receivable by them, everything they would like to know. This is known as financial position. Then employees. Employees are working for the organization. They are working very hard for the growth and prosperity of the organization. They would like to know if the organization is growing, and with the growth, their personal prospects are very well being taken care of or not. This is what they also would like to know. Then some external users are there, like the investors. Two types of investors are there. Those who have already given money to the business from their pocket to earn some extra money. Likewise, some potential investors are there who are thinking of making investment in your business. They both would also like to study your financial statements or the accounting information, so that they can make rational decisions. Here it is written, making rational decisions about the entity. So they would like to make decisions, and for making decisions they require this accounting information. So with the help of that, they will take decision whether the money they should invest or not, or the money they have invested is a fruitful idea or not. That is what they all want to know. That means their money safety concern. They are concerned about the safety of their money. Then banks and the financial institutions who have given loan to the business organization, whether the business organization has become capable of repaying their loan amount or not. That is what these banks and financial institutions want to know. Then suppliers, that means those who are supplying us raw material or the products in which we are dealing as businessmen. If they are giving it on credit basis, whether we are able to repay that timely or not. That is what they want to know. Then customers, our customers, they would like to know whether we are charging from them correct price or not. That means they want to know about our pricing strategies. This they can know about from our accounting records only. If our profits are very high, it means we are charging very high from them. So they would like to know that, and with this only they will retain with us. And they are our mouth advertisers. If we are charging reasonable price from them and we are providing them good quality product along with good quality services, then they will be advertising our product to other persons also. So they are very important part. Then government and its other regulators, they want to know about our tax liabilities, whether we are paying taxes timely or not. Then research scholars, those who are doing their research work, they would like to know about our financial statements or our accounting information, because they may be involved in comparative studies of our organization with the other one. And public wants to know, we are using public property. If public property is being used, that means we are using society's property. We are a social, business is also a social service. If we are doing that, whether we are involved in real social service or not, we are protecting the environment or not, these are maybe the main concerns. They are the main stakeholders in the business. This is what is involved in our accounting definition and meaning. And last, as a conclusion to all, accounting as science and art. In the definition and the meaning, we have established that accounting is a process and recording of it is done. Analysis has to be done. That means there are methods, there are techniques to record it, to analyze it. So it is a science as well as an art. It is science because it has systematic knowledge. It has a system, and it is an art because it can be practiced. Okay, so this is all what we have seen about accounting today. This was quite interesting, and it was a good opportunity for me to share all my knowledge with you relating to it. A little bit of that I shared with you people. I hope it is of good help to you. You will understand the concept. We will meet in the next video with the remaining portion of this chapter. Till then, keep watching and keep learning. Thank you.